Very nice to meet all of you.
Thank you for coming.
I do these kind of conversations since 2016. From central bankers in Australia and Korea to the heads of Wells Fargo, Visa, MasterCard, and trying to figure out what this blockchain thing actually means to them. And sometimes I even have compliance officers sitting next to me. One of them, Dan Friedberg, did not look too good these days. Anybody know who that is? FTX's general counsel. Anyway, so I hope you do not have a background in online poker fraud. Is that correct?
This is definitely correct.
This one doesn't work. Okay.
Okay.
So the
Yeah,
question
it works now.
was,
Yeah.
okay, yeah. Do you have a background in online poker fraud?
Zero.
Perfect. That's a good start of our
Thank you.
conversation. Okay, good. Thank you. Thank you for clarifying that. Good. So, but as we're saying, that's a lot of things I think went wrong over the last few years, and we're very clear that trust in centralized organizations and trust in people was really not that successful for most of us. So does trust still matter in this trustless work of blockchain and crypto? What can we learn from each other, from regulated entities, from different jurisdictions, how we operate? That's our key topic for today. So what I would like to start with is a short self-introduction. We already know that Orist is not having done poker in the past, online poker in the past, but tell us a little bit more about yourself, and then we'll just go through the rest of the panelists, please.
Yeah, thank you. So I'm the Orest. I'm the general counsel GC at 1inch in the project since the beginning of its release stage. Before was working with many DeFi applications in the area, but decided to finish my DeFi journey at 1inch as one of the greatest products in the industry, and zero experience in poker and gambling. Yeah.
Thank you. So my name is Marcos Benitez. I'm head of sales for Switzerland for Copper.co. For those who doesn't know, Copper is an institutional grade custodian, and we also provide access to different tools like, for example, Copper Connect with DeFi. So that's why we are on this panel, and also counterparty risk management.
Hello, Salama Belgali. I've got a couple of friends here. Global head of business development and partnerships at BitMEX. So for those of you who don't know BitMEX, it's one of the very first crypto exchanges focused on derivatives. I've got my background in TradeFi, like probably most of the people in this space. And yeah, exciting times.
That's for sure. So a lot of people think the FTX crash is the Enron moment of the crypto industry. And I think I'm probably old enough, and a couple here might remember what Enron was, but it basically gave us a lot of regulations how we are operating today. Do you think that is correct? And more importantly, if we had better regulation, would it have prevented the FTX catastrophe? Here you go.
I'm the first, yeah?
Good.
Thank you. So I don't think so, like that the more heavily regulated environment would prevent FTX crash because of the reason that FTX was one of the, it's a traditional finance operating with crypto. To me, it's not like the part of the blockchain industry. It was the most heavily regulated venue in the globe. And still it crashed, and still many people lost their funds. And so how far should we go, to regulate the area, to not lose the funds? We, of course, don't know many nuances behind the FTX cracks. Either it was like negligence, a lack of professionality, a scam, speculation, but no. It would not, the more heavily regulated environment would not prevent that. And your second question?
What do you think? I mean, BitMEX has an interesting history on regulation, right?
Yeah, right. Well, yeah. Where shall I start? Yeah, I mean, I totally agree. I mean, this whole thing with it's a very good case for Gary Gensler, right? It's perfect, and then they can push this narrative of, we're here to protect the consumers, and put the seat belt. We have seat belts for the cars. The crypto industry needs that, but if you look at really what's happening, the SEC is making a case against FTX. But is it for really retail, like to protect retail? I don't think so, because the first thing that they are doing is going for the interest of the VCs, 30 VCs. So they are representing, obviously, the rights for
You
for
mean
the
the
big
people
cats.
that did really do deep due diligence on FTX? Is that correct?
Exactly. Like, yeah, I don't want to name anybody. Go ahead.
I would say a bit like, I think it's a middle ground. I would say that if FTX was properly supervised and regulated, then maybe it wouldn't have happened, because what happened was excess of trust in the entity by investors and the general public that didn't look behind, what was happening behind the curtain. And essentially what they were doing was like acting as a bank, using the rehypothecating the assets of the different clients, and that wouldn't happen if they would be actually regulated as a bank. No?
And by the way, FTX was kind of regulated, right? And they were audited, and somehow
Under the
it also,
Bahamas law, or
yeah, and the many more.
No, exactly, but just to add, under the Bahamas law, but still you have probably the liability to do audit of your statements, I think that the company also the structure was too young to be, this in the end, yeah, sorry. So I think that the company also was too young to show the reports, and this was why it was one of the problems.
so you think it was inexperience or was it outright fraud?
I have no idea.
Definitely a fraud.
Yeah, I think you're probably not wrong there, right? That's why they're all singing like little birds right now.
I would say if you go to MIT and you have those parents, probably yes, you should know what you're doing.
So, of course, it didn't really help the industry what happened in 2022 for institutional investors to trust in the crypto space. We're waiting for the large organizations to come in the crypto space over and over again. Is 2023 finally the year when we will see traditional institutional investors coming into the crypto space?
I mean, I hear on and on, when are the institutionals coming into this space? I mean, the institutionals are already in the space, yeah? Then you have to make a differentiation. What are we talking about here? Are we talking about banks? Okay, maybe they're a little bit chill, they need a little bit more time, but the big funds, the big asset managers, they are already there, and they are investing even more, and especially right now. They are totally contrarian.
So like the Canadian pension fund or the Temasek out of Singapore that lost so much money?
I love how you're having all this list of examples for that.
Great moderator.
Very good illustration. Thank you, Mark.
I mean, on our case, it's like, as you may know, Copper doesn't work with retail clients. So we get a lot of the temperature sense from the client base, which goes from hedge funds to prop trading firms. I would say the interest is still there, but we see it's a lot of funds probably will stop raising funds for the next, half a year, 1 year. But definitely, big institutions are there, and they may not be 100% active, may not be just yet touching, the assets directly, but maybe they are involved in other ways. Like, as you say, a pension fund will probably not buy directly Bitcoin or Ethereum, but maybe it's gonna go through venture capital and get an indirect exposure. So I think there are still a few things that need to be sorted out on the regulatory side. Probably Mika is gonna help. And also I would say we would like to see also a bit more split between, an execution and custody, which I think that's key to avoid what happened with FTX happening again.
Yeah, I agree with both. Just to add that definitely institutional players are for a while on the market. Yeah, and since the beginning, it all just depends on the risk-based approach they take in the end. But one of the struggles we at OneInch at the moment have is how to make this environment, the DeFi environment, more attractive to institutions. On a global scale, with the risk-based approach, which is pretty medium or average in the traditional finance, and just to tell from the experience to speaking to many of them, to many of the venues, financial institutions based out of Switzerland, that they all expect a playbook, which is not exist on the market. And this is the problem, and this is why I am not sure for whether 23 will be a year for institution to jump inside. It just is you expect the playbook to be drafted by FINMA or any other regulator, or you draft it yourself and create a use case with the regulator.
No, I think you made a very good point regarding how do you know in the decentralized space when you operate there, who is your counterparty, right? The whole kind of engagement. I know Aave has Aave Arc. Of course, 1inch Pro is starting to give that opportunity to potential institutional investors and start to test the technology. It was interesting, just for the audience, one of the chairmen of one of the Swiss banks said, yeah, he loves the crypto community, because a lot of crypto OGs right now are trying to figure out how to get into the traditional investor world. So we're seeing money flowing out of crypto into the traditional world. That wasn't very fun. But I think we see definitely traditional financial institution using the technology. They see the benefit of the speed. JP Morgan, you're probably all familiar with doing the bond swap between Japanese and Singaporean bonds using Aave, Uniswap, and Polygon, and really trying to embrace the benefits of decentralized technology for their infrastructure. And I think is that one of a kind, or do you see that as a traditional trend?
Yeah, can I? Yeah?
Yes.
Sorry. So just to
Tell us more about 1inch Pro.
Exactly.
And why.
So just to say, like our arc, and the Polygon synergy is a bit different. Our arc is money market. Polygon is a gas-efficient chain. What we do is we try to create an existing solution at the EVM chains, on Ethereum in particular, and we are different to our arc is that we are creating a swapping engine, and try to make, and this is the main hurdle, what we are trying to create, either to use the existing liquidity in the DeFi, or to incentivize the new liquidity, which is a different level of organizing the trading or the products. And it's what 1inch Pro is all about. What we're trying to do is to create a comfort for institutional players to join the DeFi. And the main struggles, exactly what we are struggling with. The first one you mentioned, how it's not like how to know your counterparty, because I think it's the easiest way to solve it, to know your counterparty. For example, use a custodial wallet, yeah, and it's to separate the bad actors' assets from the good actors' assets in the compliance environment or in the permissionless DeFi environment. And it's our day-to-day struggle at 1inch. Yeah.
Yeah, I think there is definitely a use case for a blockchain in the banks. I mean, there is payments, there is settlement, there is all these operational activities which are very slow and manual most of the times, and which can be speeded up. This said, I'm not sure how fast they are on the other things, on really bringing DeFi accessible to their clients, for instance, and they get kind of. That's my feeling. They get kind of cold feet, and for different reasons. One of them is just cannibalization of their existing products, and the other thing is that it's just takes tremendous effort and investment to move from the old world to the new world, and most of the decision makers have so much to lose. I mean. I don't want to be mean or sound mean, but most of them are kind of close to retirement, and they just have a downside, right? So what would they win in trying or testing something that they're not really sure if this is going to work? It's only downside. I mean, I know it's not very politically correct, but I'm just throwing it out there.
It's okay. We're middle-aged white men. Just hit them hard. It's okay.
What I see from this side is mainly like the largest institutions are kind of skipping crypto now and going really into digital assets. And when we say digital assets, is everything that is related to DLT, and it's going to be like a permission DeFi. So actually, because of travel rule, they cannot really get into DeFi. That's not going to be possible. So what I see is more like a CFI, centralized finance. So we're gonna have some gatekeepers that are gonna be in the middle and gonna make sure that the participant inside that, whitelist permission pool of assets are actually already bet. And then on the other side, we're gonna see a big push, probably 23 and 24, into tokenization, because I've been in the space in the 17, and I remember many people, especially in Switzerland, talking about this real estate tokenization, blah blah blah, and look where we are 6 years later. We are just now starting to see like the real use case and where the institutions feel comfortable starting doing so.
May I just put one question to the, sorry. It's just very interesting to understand your approach generally on the, on how to make this comfort for institutionals in DeFi. Whether you see the DeFi as a more separated, permission DeFi, separated from the permissionless environment, or you see that the regulated DeFi should be, I don't know, permissioned assets inside the permissionless space. Like what approach you would like to, yeah.
I think, yeah, well, we are quite agnostic, no? So we just follow what the client base is demanding. And what I think is possible also doing it actually on a permissionless blockchain. What you just have to do when you, as you very guys well know, when you deploy your pool is just to vet the counterparties. But you don't need actually to use, I don't know, Corda. You could do it on Ethereum.
So is it more like traditional organization embracing the technology but not contributing capital into the pools? Is that a fair understanding?
I would say
Yeah.
so.
Well,
Sorry.
it's more. I think it's more of a wait and see. They're adopting more of a wait and see policy, right? So it's just yeah. And most of these big organizations are highly regulated. So this is also one thing which is kind of hampering their efforts towards innovation.
So who is investing in crypto then? Who do you see coming now, entering the market over the last 12 months, still staying in, especially maybe being even active in the last 2 or 3 months?
Yeah, I would dare to say, especially we with the funds that we are working on, is everyone who raised substantial capital in the last 12 months, which didn't deploy yet, because I saw that at the beginning of the year, actually, we started going down substantially. So everyone that already raised capital is still ready. But yeah, it's a wait and see. No, they are sitting on a lot of dry powder. But yeah, it's not maybe the time to decide.
Yeah, I confirm the view of Marcus, and that's mainly the early, the OGs, the early people into the space, and they've been through different crises several times, and they learned from their past mistakes, and they know that this is just something which is temporary, and they're kind of like ready with dry powder for snapping the great opportunities. This is a very good time, by the way, because you got rid of 99% of the noise, so you can be more or less sure that whatever pitches you're going to go through, whatever due diligence, it's kind of easier than, let's say, 1 year ago. And don't come with another example, Mark.
No, I really like the crashes of 2018 and getting all the white papers and quotation marks out of the market. That was good. So we'll see. No, I'm sharing
Are
this
you
with
missing the business models on a napkin?
Oh, absolutely. I love those, especially like I usually went back and said, my project has a white paper. It's the first 61 pages in your printer. You can just count them, and you got my white paper. Anyway.
Thank you. Yeah, I would just to add, that's exactly. It's a very good time to. It was Goldman. I'm really not a BD person. Yeah, I'm not following all the trends, but because of tightly engaged with the sector, I'm noticing some of the smart activity, for example, from Goldman Sachs. Yeah, what Goldman Sachs do right now is a very smart move to purchasing existing products that not really having those hard times, that do have hard times on the market, and investing into the projects that are developing a cool technology on the market. And a similar type of institutions like Goldman Sachs are, navigating the market and doing a smart move. They wait long enough to understand the maturity of the market, probably to catch up the big fish. Yeah, that will scale definitely.
I would add on DeFi, I think the main driver has been, at least in the last cycle, greed, to be honest. When we were seeing on Terra Luna like almost 20% per year, I tell you, I saw some big names just checking, how how can I integrate? How can I use actually, you know, a custodial wallet to connect to the pool? So, and right now when we have like close to zero, you know, especially on the stables, I mean, who wants to take the risk when you can invest into bonds? As you say very well, Mark, I mean, this phenomenon of OGs trying to get into TradFi because, well, now is where the yield is, no? So I think until we don't start seeing a better yields, then I see it's gonna stay quite stable and stagnant.
I agree. It's in the end all about the yield. In the end. Yeah.
Yeah, no, I think that's a conversation. As a traditional investor, you think like, I can make easily 15, 20% in a very, very safe environment. Why would I put it on a DeFi wallet, right? So there has to be really coming out what's the yield there. Let me look a little bit in the future, though. As we're talking about like all the technology advances that peer-to-peer and especially the decentralized finance space is showing us is possible, when do we see broader traditional assets actually being available in the DeFi space? I would love to hear a little bit more, like 2 years out, 5 years out. What are you thinking? How can we use the technology in traditional markets?
I mean, most of the people, they think usually like DeFi separated from, let's say, CeFi. When you say traditional markets, do you mean TradFi, or are you also considering CeFi?
Actually, assets outside of the traditional financial instruments, but things like you start with mortgage-backed securities, for example. You go to actual property, not only like symbol properties, but really property portfolios. You look at insurance bonds.
I mean, for sure, there are a lot of trials on bringing the traditional world's products into DeFi. And I personally think this is the future, and I think most of the people have the same view. Now, when this is going to really kick off and become mainstream, I don't think this is going to happen before, let's say, 5 to 10 years. And yeah, because there is so much which is also involved within the way these real assets will be regulated. And also, if you take securities, I mean, let's not even talk about real estate, which is even more complicated. If you just start considering securities, whenever you just talk about the word security, then you have a right-away regulator which pop up.
Thank you. Just to add to that, you know, we, at least in Switzerland, you can tokenize security. You can put it on the secondary market. It's like not an issue. It's just, you have like those additional steps and hurdles on technology. On, you know, you're spending money on tokenization. You're spending money to market that idea. Is that in the end it's probably not such efficient as just traditional mechanism to trade secondary assets or tokenize them. It's just all the matter. I agree. It's the matter of adoption. The first, what you need probably to go to the security and tokenization and participating DeFi into that is to create a comfort in the traditional, you know, for liquidity trading space for the institutions. So they educate themselves what is the area is all about, why is that DLT is more efficient, how the smart set of smart contracts can help them to make bigger yield. So probably to go to the security thing, you know, and digitalization of that.
I would say short and sweet, just 3 to 5 years minimum. I saw a couple projects that wanted, for example, to take stable pools and then deploy them on SMEs in Eastern Europe, and it got traction. Then, well, unfortunately, this market came, and now it's kind of a dead project. But I mean, I think there are very interesting ways to, you know, to decentralize a little bit, you know, the access to this type of opportunities, because essentially, normally our funds, the one doing this type of yield. So definitely there is a way to do it, but I don't see it any time before 3 to 5 years.
Personally, as an investor, I would love to see traditional investment yields, safe, secure, audited, available in a tokenized environment. I mean, I do REIT investments in the US. I would love to see them tokenized and being able to trade 24/7 globally with the appropriate backend, right? Okay, that's my wish for the future. We have a couple of minutes left, so I would love to just quickly say, there's a community out there. What is your recommendation they should focus on over the next year to create the right rails, the right infrastructure, locally, technology-wise, but also with their regulatory communities to bring the technology advantages that we're talking about into the broader market?
I mean, if you are active in the DeFi space, you need to really to focus on user experience. This is really, really a basic and primordial requirement to take this whole story mainstream.
I would say counterparty risk management in general, both centralized exchanges and decentralized exchanges. And I will also kind of like recommend people not to get into anonymous projects anymore. I mean, we saw what has happened all the time with that. And I think now reputation and being upfront and being on the front, like people like the you know, you guys 1inch have been doxed, as they say in the community, for quite a long time. So I think that's a good measure just to start, you know, to change the mindset of all in into, okay, let's actually sit, read through, do your own research, and just be sure where are you deploying your funds.
Yeah, I agree that counterparty risk is a very important area to dive in. And just as a legal guy, I would, take my hat and tell that the compliance protocol solutions, effective compliance protocol solutions that identify the counterparty risk on many scales, not just a direct counterparty, but also indirect counterparties, identifying hacks, this is what we need in the market. Efficient compliance tool to prevent hacks and to prevent bad actors use the DeFi in a bad way.
Very last one, it's just to test your ability to predict correctly, because when we get together here in about 50 years, give me the number, how many years until then will have SBF will have spent in federal jail?
0.
50.
Yeah, it will be the settlement, I think. Yeah, 0.
Thanks, everybody.